This is Rod Kusin and Spooman for Risk On, September 19th, 2014, all times on the chart or Central Standard Time. Let's take a look at where the premium was in relationship to fair value. That was your first clue that this market was going to tank. Now, just a few minutes after the open, you noticed that the highs of the premium were barely getting above the fair value line, which today was at negative 7.7. As our traders know, when this kind of pattern develops, you know you're in a short. 99% of the time, that's the way it plays out. There are a few instances where it doesn't, but generally speaking, if the bulk of the bar is below fair value, the market is shorting. If the bulk of the bar is above fair value, the market is rallying. Now, while there was a difference between fair value today as opposed to fair value yesterday, yesterday's fair value is closer to 8.1, right there. And as you can see, the market rallied. The bulk of the bars were above fair value, especially right after around 9:30. It didn't move a lot, but that was the direction of the market. That was your trend. Trend can be determined by way of fair value, but in my estimation, generally speaking, fair value is going to be closer to splitting those bars slightly in favor of one direction or the other. But when the bulk of the bar is above fair value, we're rallying. If the bulk of the bar is below fair value, the market is selling off, and that's what you have today. If you ran your calculation of your upper and lower premium thresholds, you will have noticed, as I did very quickly, that those numbers were considerably off. And that happens. Your calculations are only designed to give you a basis on which to trade the open. But within a few minutes after the open, you may have the opportunity to readjust those numbers. And then if you do, by all means do so. Don't stick to those numbers that are calculated. They may not be accurate. Sometimes they're right on all day long, but sometimes they're not. And today was a very good example of it not being correct. So right at 8:44, where we hit our initial low and then pivoted, I adjusted my lower threshold to where the premium was at 8:45, and you can see why. That was the last bar prior to the pivot. And the premium at that point in time, the low of the premium was negative 874. So I set my threshold to negative 874, and I left it there all day long. Okay? The upper threshold I'm not even going to talk about, because the upper threshold never, or the premiums, the highs of the premiums barely made it above fair value to begin with. And at the point in time that they were pivoting, in most of the instances, the high of the premium was below fair value. I mean, look at right here, okay? Look at that bar, 852. Your high was below fair value. Over here, 1010. Your high was below fair value. Now over here, it just barely made it above fair value, but it was diverging from the previous bar, so there's no way to really have calculated, even established any kind of an upper threshold level. It just, it's just not there. And then even here at this high, your next time the Spoos tied that, you were just barely above fair value. All right, and then she dropped off once again. So yeah, your threshold levels, the high threshold level, was very difficult to calculate and even estimate. And for that reason, on Monday morning, you're going to need to wait. Wait. Give the market a little time to tell you what it's doing before you establish that upper threshold level. The low threshold level shouldn't be much trouble. But the upper threshold level, yeah, you got nothing here to work with. Now, let's see if there was anything else that was really forecasted in the way of the premium. And the answer to that is yes. For example, using a negative 874 as the lower threshold level. When this bar at 847 occurred, which was considerably below the lower threshold level, you knew that this low at 208.50 was going to be exceeded. And so shorting the move up made good sense. Getting a fill in at even 1075, you knew this thing was coming back down to at least 850. So there was several very high probability ticks. Here again, you're being forecasted on that bar. We're continuing to go down. Now right in here, we're getting right to that point where we're about to move up once again, but it doesn't go very far. It never even makes it. Okay, that high never makes it to the fair value line, and down it comes. You can see the divergence. And you had really very little in the way of any kind of a forecast here, because these bars would have to be way up there for them to be predictive. None of these bars really are predictive. Not in my estimation. Maybe right here. Maybe. But we've got so little to work with. I question that. Okay? And over here, maybe. But if that was the case, there was your prediction, which comes true. However, this bar runs a caveat over that bar due to the fact that it's higher and reestablishes your prediction. So in any case, you've got a lower threshold that's doable for next Monday. You can work out that calculation on your own. Now, here again, this low, look at this low. We're below that threshold level. We tag that low right here. And look at where the bar is now. Negative 875. All right. I'll allow for a 0.01 margin of error. And you get a nice divergence, and up she goes. Okay. Nice little move up here. And then your divergent bar right there. So the premium really gave you a lot to work with today. And especially was that true as it came down and hit the low close to 1230 today. Now, the low of the day is associated with these much higher lows on the premium, and the market had a nice rally back up. There are various reasons why this price point was predictive, and we'll show you that in just a minute. So there you have a brief analysis of the premium. Now let's take a look at some opportunities for shorting the market today, given that the trend was down. How did we know the trend was down? We just take a look at our primary indicator for that, which is right here. All right, let's just expand that out. We've got 4 different indicators here, slope of which is important. And before the market was open today, our primary indicator was already beginning to drop, as was also the case with all of your other indicators. So you were short at the open. You were short. And pretty much remained so until maybe, you know, the last hour of trading. That might have been a little bit more difficult to ascertain exactly how this was going to play out. But expect the market to drop back and test that low on Monday. We'll show you where we expect that it might go. But here's your primary indicators. So you're short. So now you number one, you have your trend, and now you're just looking for the contrarian. And we had so many instances of finding the contrarian. We like to use the 0.6. Let's take a look at that here. Let's get rid of that. Let's pause this for a second. All right, so let's go back. We're using the 0.6 as the contrarian. And we have all sorts of opportunities for shorting this market through the course of the day. We have our first occasion. Well, actually, we have one right in here. We're overbought here. That's your contrarian. You're overbought again right in here from 850 to 853. Here you're overbought as well. But you got to be careful because you're very close to the lower threshold line there. So, as our traders know, that's often your best move. And if you look at your volume line here, you're finally getting a negative bar right there and a nice divergence as well. So there's another opportunity to short. Another opportunity here. Don't get much out of it. Watch the up slope here. Then over here, right in this period, you're overbought. Again here and here. And then on the way back up, you get a little bit of it here as well as in here. Nice divergence there, but it doesn't give you anything. And into the close, big divergence right as it peaks up here. See the divergence on our primary divergence indicator. Okay, nice. Overbought. You're all overbought in here. But that's where she finally takes off because of the divergence. So didn't really have much to worry about there. But in any case, those are numerous opportunities for taking the short. Let's just pick one of them. We'll pick. Let's just pick here. Okay. All right. Let's pick this period right in here at 1044 to 1047. Now, you know that your job here, once you're set up for the trade, you need to go to the premium and the ticky in order to confirm that this is the right time to take this trade. Okay? So keep in mind the time, 10:44 to 47. Let's take a look at the premium and the ticky and see what it tells us there. 10:44 to 10:47. Let's get rid of this little aberration in here. Hang on for a minute. All right, so here we are at 10:44. All right, 10:44 to 10:47 right in here. So what does the premium tell us? Now on this bar of the premium, which is nothing more than a bar that's above fair value, keep in mind this is the fair value line, this is not your upper threshold. It manages to get above fair value, but on these equal highs in here, it's below fair value and dropping. Okay, you got to short that thing. You don't really have any basis on which to say, oh, this is going any higher than it already did. And if you didn't do it there, certainly as it just barely makes it up to the fair value line here, same price, you're still in an overbought condition. But what's slightly to your advantage at this point is that you can see you're divergent. You're divergent, okay? And so down she goes. Now it's not a big move. Drops from 550 down to 450. You make a point out for that. And if you held it a little longer, maybe a bit more. But then you're right back up here. Now, do you have a cause for concern here when it moves up to 575? Keep in mind, that's where we were right over here. We're right back up to 575 again. Does this bar or these bars on the premium right in here tell you that you ought to wait? Look closely. I need to spread this out for this to become clear. Okay, look at this nice and closely. All right, here's your high bar on the premium. That's associated with the first high back up to 575. But the next bar on the premium is a lower high. And again, you are just right into the fair value line. This is not predictive. It is not predictive that this market is going higher. It's not high enough. So your divergence there, once again, on that bar, you're right in a position where you're overbought. That's confirmed in your two indicators here. Get rid of this trade, or get into this trade, I should say. Get into a short if you're not already, and then when it just barely makes it back up to that point again here, wait for the premium to turn. It does, and down she goes. Very easy. Another nice opportunity for shorting this on this setup here, where you're right into, oh my goodness, you're right into the standard deviation line. You're below it, you're rallying up to it, it becomes resistance, boom, take that trade. Take that trade. Premium barely makes it up to fair value. So some nice opportunities for cherry picking your trades off of today's activity. Now the last thing that we want to draw attention to, let's go right over to our composites. We're not going to worry about the Dow here on this particular video. I want to draw your attention to the composites. Now let's expand this so you see what I'm talking about. Here's your composite profile. Market was moving down today. Where is it likely going to take a breather and perhaps begin to gain some support? Well, there's two areas where that, well, maybe three areas where that might occur. As we were moving down above the upper value area here, and keep in mind this is a composite run from 723, you can likely expect that the market's going to find the 2006 area an area of support, particularly right there at 2005. But if it gets much below that, down here at 2003.75, it hits the low volume below the upper value area, and it's going to start to move up. Okay, we're going to get a little bit of support in here, particularly right there at 2002. Right there, 2002. And then the next area where you're going to get more support is here at 1998.25. You can see it right on the chart, right there. See? Right there. You could have set your lines there earlier before the open. You would have known these are areas where you're liable to find some support. So let's just do that one more time. I'm going to just move this next line back up here. All right, if she's dropping below, all right, we'll keep in mind our upper value area. We're liable to see some support there. If it breaks below that, maybe a little bit of support right at around 2005, and if it drops below that, you know it's going to dip down to 2003 3/4 to fill in that low. Sometimes, but not always, sometimes that'll be a support area, but more likely at about 2002. Okay, so there's our lines. 2006 1/4, 2003 3/4, 2002, and 1998.25. What happened when we hit 2006.25? Let's go back and just look at, let's expand this out. As we dropped today, let's superimpose these lines. It's 2006 1/4, which is right about there. Okay, that 2006 1/4 line is right here at your standard deviation line, by the way. Let's come back. All right, let's go back. All right, so there's your 2006 line is right there, your magenta line. So there was just a bit of support right in that area, as you can see. Okay. Now, was that tradable? Sure, sure. You could have made several nice ticks off of that support area. And you could see that the market was responding right at around that number. But what was the next number that we looked at? 2003 3/4. Okay? 2003, 75, right about there. We hit 2003.75. Nothing happened. Nothing happened at all. Okay. What was the next area of potential support? Now let's do it this way. 2002. Okay. Okay, right in here. Okay, definitely. 2002, you had a little bit of support there. And a bit of buying took place right at around that number. And then our last number was 1998.25, which is, of course, right down here. Right at the low. and you got a lot of buying at that point. Was there really any kind of a heads up on that? As we mentioned, possibly there was a heads up right in here. Okay, this is one of the highest bars on the premium all day long, associated with this high in here, forecasting a potential return to the price of 2002, which occurs over there, and that's a nice 4-point move. So possibly you had a heads up, and I only say that because it's still so considerably, the bulk of the bars are so considerably below the fair value line that just doesn't make a whole lot of sense. But you might have managed to play that game successfully. In any event, you had a declining lower value area here, and oftentimes when the market does rally up, it bounces off of that declining low value area. It does right in here, but it doesn't stop rallying, and she comes right back into another move up and moves in that direction of this upper value area, this declining upper value area. It doesn't quite make it, and then down she goes. So just a few areas of interest to us today, opportunities for shorting this based on the contrarian. You go to the premium and the techie. Look for your areas of support on your composite profile, which we had in here. And incidentally, the Dow, look at the Dow's composite. You know, there was nothing in the way of volume on this rally up, and I hope all of you realize that. There's just nothing there. But your first area where you were liable to hit a bit of support was down at 1712.66, and then right before the drop off there, right in here, at around 256. And your low today was at 17,257. Notice what happened when you came down to 17,266. Now I'm just going to get rid of the we'll just draw a line, 17,266. Right in here, you got some buying going on. Okay. Which corresponds with the open, incidentally. So there was your initial balance. And then the low here occurs. And let's just look at where that low turned out to be. Oh yeah. Right in there. Well, it tells us that it's 57.46. So it's very close. It was very close. And you could just see that on the composite. Right here. Okay. Keep those composite charts up and running. They're a gold mine. So that constitutes our brief discussion of market activity. Today, this market is in a short. We should be seeing some very significant drops in the Dow and the Spoos as well. We've been telling you this all along. You can see it for yourself. Just look at where your let's get rid of this so you can see my point. $17,040 for your point of control. It's actually a little lower than that, which is kind of unusual for the period from August the 13th. And we've got a long way to go to get there. So you can expect this market is going to continue to short, but don't think that that's where it's going to stop. All right, don't think about that. Whoa, you've got a gap. All right, way over here. Let's take you back all the way. Let's see here. Where's my next composite? Oh, don't have one here. All right. Let me show it to you on our bigger chart. Now you can see this. Let's get the real picture of what this market is going to be doing in the days ahead. All right. Apparently we dropped that date from the chart, so we'll just take it back to 9/17 and leave an 8/28. Let's go back a full year. Okay. Now, you see my point? Point of control from that particular date takes you into 16,452. That's going to get hit. All right. That'll get hit. And that's 700 to 800 points below where we are right now. This low volume area right in here, that's going to get hit. Of course, 16,640. So there's your future. Back to the future. This market's going down, and here's your proof. And this is Rod Kusin and Spooman for Risk.